Alright guys, welcome back to the channel. In this video I just want to give you an update on the euro against the dollar. I have a potential short setup that I'm looking to take. Now this hasn't formed completely yet, so you still need to exercise some patience before you even start to look at this setup. But what I really want to go through with you in this video is how I analyze this pair and how I really refine this specific setup I'm looking at using various different indicators. So let's get into the video. So my name is Pep and I'm here to make you a better trader. So in my previous video you can go check out the previous analysis of this pair, so you can click on that up here. So what I was walking you through in this video was the euro against the dollar was looking fairly bearish on multiple time frames. Now over the last few days on the daily chart we've had a pullback, and that's the setup we're going to be looking at in this video. Now before we jump into the charts, if you can do me a massive favour, like the video, hit the subscribe button, that's going to help me out so much. So without further ado, let's jump into the charts. So just a recap on this pair, late last year, this pair was looking very bullish. We're putting in higher highs and higher lows. And then if you remember from the last video, we topped out here, we rolled over, we broke this level of structure here, we had a pullback, and then again we put in a lower low, so now we've violated market structure twice. Again we put in another pullback, lower low, higher low, lower low, and this is the current move I'm currently looking at. So if I grab this parallel channel, I'll show you the area that's on my radar. So this is a key high area of value for me, and this is a high probability area where I'm looking to get short. So why is this? Well, recently this has acted as support here, we then broke through. It's acted as resistance here, resistance here, resistance here as well, resistance here, bit choppy here with a large wicks. There was a lot of volatility here these few days here. Again, resistance here. And if I zoom out, let's look at any other areas of confluence. So again, acted as resistance here, support here, resistance here. So in regards to building a case, this is a key area I want to look at. As we're retracing back to this zone here, I'm asking myself, do I want to be a buyer or a seller? Well, looking at most recent historical data, look at all these levels of resistance here. As price reaches here, the ideal scenario and the high probability setup is to really look for short positions. Now with this setup, I'm using a top-down analysis, so the actual entry I'm looking at is on the 4-hour time frame. Because you always need to remember, I'm not just going to take this trade aggressively. Now, I guess that the one setup you could have looked at on the daily time frame is this pin bar here. So this could look something like this. So if I bring up my short position tool, let's just say hypothetically we would have entered there, stops above the pin bar, targets at the last low here. So that's a good and risk to reward ratio, a nearly 1-to-3 R. But the more refined setup I'm looking at is on the 4-hour time frame. So if I jump to that now. So again, on the 4-hour time frame, we've creeping up to this zone here. The actual pattern I'm looking at is a double top. So the double top forms at the top of a trend. So as you can see here, this is trending upwards. We have higher highs and higher lows. And as we currently speak, we actually haven't put in a new higher high yet. So this could be forming a double top. Now, just clear this off. So a double top will look something like this. So this is when the two tops are as close to each other as possible. Now, the really key important thing to look at when looking at a double top, and especially in this scenario, is if this candle or the following candles close above this wick here, then that really invalidates the double top. I will write off this setup if price closes above this wick. But at the moment, we've had this retracement here, And now we're putting in the second top. So this is a setup I'm looking at. Now it's really important to be patient here. You know, I really need this candle to close. So this is going to close 6 p.m. UK time. So that's what I'm currently waiting for. Like I said, anything can happen with trading. This could, like I said, just close above this wick and then I'll just leave this trade alone. Now in regards to building a case and, you know, adding extra confluences to this trade, if I pull up the RSI, so as you can see here, let me zoom in, we actually have bearish divergence here as well. Now again, I still need to wait for this candle to close, but this is, you know, additional confluence that this market may turn around. Now not only do we have bearish divergence here, we're also at an area of overbought. So I keep the RSI at the default level. So if price moves above 70, then that is considered overbought. So we have that. So we have this level of structure, which has acted as resistance in the past. We have a double top. We have divergence. We have price is overbought as well on the RSI. And the other confluence is the 200 MA. So this is nearly touching as a 200 MA. So this could be acting as dynamic resistance as well. So that's another confluence. So all things are screaming at me to take a sell position. Now in regards to take profit and stop loss, let's just say hypothetically this candle closes here. You know, I definitely want my stop above this pin bar here. Now I'd want to give it a bit of breathing room. So in an ideal scenario, I'd want it just above the 200 MA and also above this wick here. Now a couple of ways you could trade this with your take profit. You could take some of the position size off here and then trail your stops down to this last low here. That's one scenario you could use. Otherwise, you could just have a fixed stop loss and a fixed take profit. So if we have our take profit down here, I mean, look at the risk reward ratio here. You know, that's pretty impressive. And if you maintain that risk reward ratio on all your trades when trading this strategy, then, you know, your win rate is not going to be, you know, it's not going to be needing to be high for you to be a profitable trader. Now, another way you could trade this is, again, we've got the double top here. And what you can do for, if you're a more conservative trader, is wait for the break of this neckline here. And then you can either trade the breakout here, or you can wait for the pullback, then look for another short setup here. So again, that could be a doji candle, pin bar, bearish engulfing pattern, whatever it may be. And then you'll pick up a short position here and then slowly ride it down to this last low here. So a couple of trading opportunities there, but overall I'm only looking for short positions on the euro against the dollar. Now, just to reiterate, you know, you really need to exercise some patience here. You know, if this candle here closes above this pin bar, then just leave this trade. You know, you don't want to be taking this trade because then technically this will be a higher high, and this will be a higher low, and this will still be considered an uptrend. And if this did happen, the next logical place to look for short positions is probably going to be at this level here. And then again, all you're going to do is just wait for price to reach this level here. This has acted as resistance in the past. And then you'll look for short positions here. So this is at the 197 level. So again, just exercise some patience. Let the trades play out. Let price do its thing before you jump into a trade. So I hope this has been helpful. If you can do me a massive favor and if you found value in this video, please hit the subscribe button. It's really going to help this channel out. Cheers, guys.